Our market master for the day now is RAAMDEO Agrawal, Joint MD of MOTILAL OSWAL Financial Services. RAAMDEO, hi, good morning. A lot of people are saying that this is a start of a multi-year bull market, and don't be surprised if markets continue to make all-time highs and eke out big outperformance even from here on. What's your house view?
So, house view is no different. These are very once in a lifetime kind of events which happen in any economy, and here is a change which is too big to size up, right now. And so valuations are reasonable. You have the highest interest rate right now. So what is important in investing is what is the downside? I mean, if I put 100 rupees today, can it become 50 rupees or 40 rupees? So I don't see that kind of a chances there. But can it double from here in 3, 4, 5 years? I think that possibility is very, very high. So thanks to this event, that your downside probability is say 10%, and upside in next 3, 4 years is 100%. So keeping that kind of a view in mind, I think this is a terrific time to put your bets in the market without trying to time again, whether it should be 5% lower or 2% lower, and just because we have done enough timing for last 3, 4 years. We have been timing and staying away from the market, but this is a time to actually just invest now. And that's the kind of message we are at house level we are trying to give to the people, that we don't know whether market can correct by 3, 4, 5% from here, but I think next 4, 5 years will be very interesting.
RAAMDEO, hi, good morning. That's actually very well explained. So on that note, what should investors be looking at now? Because the government is making all the right noises, whether you talk about FDI in insurance, FDI in defense, talks of some coal projects getting cleared, etc. So in terms of key pockets, where do you see the highest scope of returns coming in?
Yeah, so I think first the participants in the market, they have to decide whether they are a speculator or investor. If they are investors, in that case, the opportunity is very, very widespread, and it is going to come from all over. I mean, like right now, tech pharma is completely down and out kind of situation right now, which is not so. I think the opportunity is very large, very, very vibrant. So I think you have to have a very balanced portfolio of export-oriented companies as well as domestic plays. I mean, of course, you can have 2/3 of your portfolio in domestics, and in domestics you start with the banks, then automotive, then you go to the specific businesses where because we don't know the specific what exactly is going to be big, where is going to be a big change. Some of the companies will benefit out of the regulatory changes, which will be very, very immediate, in the sense that in 6 months what can actually change maximum, and it can completely doff the kind of gains are the regulatory changes. Say tomorrow, if you actually in fuel, petrol, diesel, there is a complete autonomy to all this oil refining companies, oil marketing companies. So that can change the valuation big time. If there is a improvement in credit cycle, that can improve things very dramatically. So I think to figure out how to build a portfolio at this juncture, it is very tough. I think you need to have a fairly diversified portfolio of good businesses, mid cap, small cap, large cap, all put together. But what is important is to get into the equity asset class. If you have 10 crores, I would think at least 60-70% should be in equities to start with, and then try to see how best you can manage the portfolio.
Okay, RAAMDEO, are you tracking development at your favorite stock, Hero MotoCorp? Anil Dua's resignation, would it have any significant impact, or is it just sentimental? And what's your call now on the stock, because it's underperformed a bit this year?
Yeah, it is. In fact, I was looking at 4-5 years. I think it is one of the slowest growing automotive company. They had a transition from their erstwhile partner with Honda, and I think the industry also went into some kind of a slowdown for last 3-4 years. So and they must have lost a bit of market share also. But I think that phase is coming to an end, and I think this royalty payments are also going to stop post June. Then you have there is a promise of almost 2-3% gain in the margins, and hopefully next round of growth in the two-wheeler starts, and they will have also the export opportunity in next 2-3 years. And I think most important is that their technology setup, I mean the research will start throwing new products which was missing for last 3-4 years. So I would think that next 3-4 years will be very interesting for this company. And at a current valuation of say something like 15-16 times next year, I think it looks I mean a reasonable pick one should have in the portfolio. They have 75% payout. They paid 65 rupees out of I think it is about 75% payout in the current year's earnings. So next year when they earn about 140-150 rupees, could it be 100 rupees dividend itself which they have given in the past? So I think the dividend yield itself can be 4-5% from 4% on a current price. So it looks to be a fairly stable and not a multi-bagger type of it, but if you want to double in 5 years, I think this stock looks to be one of them.
Okay, what about L&T, Ramdeo? Because the unanimous vote is that L&T will re-rate now. In fact, some brokerage is having a target of 1900, etc. If you've missed this 55% move since the start of the year, is it still not too late to get in?
Yeah, at least we are still buying in the portfolio. Whatever is the allocation, full allocation, we're buying 7-8%. So, you know, it's not. This is one large cap where opportunity. I mean, if you're talking about $1 trillion kind of capex in next 3-4 years, or becoming even bigger in the next 5 years, I think this one company is very well positioned in terms of their infrastructure on the ground, their credentials, and more importantly the financials. I think this is the only company in this segment which has managed itself very well on the downturn, and they have expanded their overseas portfolio. So it's not one L&T we are talking about, we are talking about 2 L&Ts, one in domestic and one overseas. So I think they are very well positioned. I think how big can it become from 150,000 crores, I mean almost like $25 billion kind of market cap, can it become a $100 billion market cap? I think that kind of opportunity is there in this new dispensation.
Ramdas, since you spoke about freeing diesel prices, and we are almost there. I mean, if the crude or rupee equation does not change drastically, diesel would be at market rate in about 3 to 4 months. But some of these stocks have doubled. BPCL has doubled in last 6 months. HPCL is almost there. Is there some more room for these stocks purely on valuations, or is it time to book some profits here?
No, I think, actually, HPCL is trading at about 7-8% to the sales. I mean, you know, the sales is about 250,000 crores and market cap is about 14,000 crores. So, you're talking about less than 7% to the sales. Now, the oil consumption, oil product consumption is growing at about 6-7%. Forget about the, I mean, actual consumption. Forget about the inflationary bid on that. So, on 250,000 crores, and the profit is maybe 1,000 crores or something like that. So you are not giving even 0.5% profit to the thing. So for a company which buys crude, processes it, puts it onto the retail pumps and gives you a liter or two at middle of the night. So I think the profit margin has to be significantly higher than 0.5%. So when the margin, so what is important is not only the diesel price getting to the market rate. I think what is important is to actually government saying you let go. I mean, you work as a commercial entity and serve the nation, serve the consumer in a reasonable way, and charge whatever is right for the commercial entity to charge. And that freedom, I mean, government actually deregulating and letting it go as a professional company, that is more important. That will uncap the value to a normal level. Maybe, I mean, then it can be 3 times, 4 times from the current prices. If they make about, say, 2-3% profit also, 3% profit also, which used to be in the past. So they can make about 7,000-8,000 crores profit. So it could be 1 or 2 P multiple right now. So I don't think this is a time to book profits. You must stay on and wait for the government moves in next 6 months to a year. How exactly this government, because these are opportunities for the government. I mean, these are the things which they have to set right, and whatever gains they get here, those gains they have to use it to, you know, create buffer in the budget or whatever.
Right. By the way, talking about government moves, the entire sugar space is now buzzing. In fact, Bajaj, Hindustan, Sri Lanka are all up almost about 10% and big volume action coming in there. We understand that the revival of the sugar industries by pushing ethanol blending in petrol and releasing areas of cane growers has become the priority for the Narendra Modi government. So this is another pocket that will be targeted by the government to solve the issues there. All of these stocks up about 8 to 10%. These are the three pockets that have been moving swiftly in the last couple of weeks. Ramdeo, insurance, defense, and now the sugar space. In any of these sectors, do any stocks interest you?
Insurance could be very interesting. So because that's a India is very underpenetrated kind of country. And this is a large business, very large business, as big as banks or so I think and with prosperity you need more insurance. So I think insurance could be a very focus area of large serious money to be made. Except that I don't understand insurance, the P&L and whatever research reports come, my understanding is still a little weak, but that looks to be a big area. Then you said which other two? Defense. I think we don't have a very clear plays on defense. I think L&T, Telco, Mahindras, I think these are the guys who will make serious money out of defense production. Maybe one or two submarines and those kind of things. But I would think that defense will benefit a lot more to the larger companies than the smaller companies, because these large projects, large contracts will go to the big companies rather to the small companies, because straight coming from foreign country you cannot jeopardize by giving it to the L1 and some small company. So clearly it will go with the credibility. And sugar is still too nascent. I would not bother about the sugar companies because there's too much of state politics, and those cane prices are to be controlled. And so unless this industry is completely freed from state government and central governments dictate that you can release this much, that much, this price, I think it's a too messy industry right now.
All right, Ramdeo, on that note, we'll let you go. Thanks for giving us all those sector-specific calls and your view on the market as well. That's the word coming in from Motilal Oswal. You should not be waiting. You should just plunge in and invest into this market, and 60 to 70% of your portfolio should be in equities.